Good morning, ladies and gentlemen. Thank you for joining us today for our BNPL webinar. Special thanks to the speakers for taking the time to share their insights with us and Mobilewalla for sponsoring this webinar. Globally, the BNPL trend has taken the fintech world by storm, with massive funding rounds and analysts valuing at over $100 billion industry. Closer to home, we are seeing BNPL players entering the arena nearly on a monthly basis for the past year. And of course, one of the biggest stories in the past year in BNPL space was Stanchart making this single largest fintech investment of $500 million into Atome. So, what's fueling the growth and interest in BNPL and where is it headed? Joining us today to discuss this topic, we have right on top there Chayan Hazra, who is the head of the payments business for Asia Pacific in Pine Labs. Below Chayan, we have Marnix Zwart, who is the head of a global head of partnerships for Standard Chartered Bank. And below Marnix, we have Anindya Datta, who is the founder, CEO, chairman of Mobilewalla. And last but not least, we have Trina Yeung, who is the chief financial officer for Atome. Folks, welcome to the show. Thank you for joining us. So, why don't we begin by looking at some broad trends, and maybe we can start from right on top there with Chayan. Chayan, talk to us about some of the biggest developments that you are seeing within the BNPL space right now. You are muted, Chayan.
So
There
what
we
we are
go.
good morning everybody. So BNPL, as you rightly said, Vincent, is the new trend which we are seeing across the globe, and it is becoming very mainstream as we see more e-com penetrating. Uh, the other trend which is coming with BNPL is pretty interesting is that we seeing a lot of newer customer segments who were not into BNPL or as you say pay later before taking it very enthusiastically. The other is new merchant categories which are taking over and becoming mainstays of the whole BNPL story which is going around. With all of that, with BNPL being a technology-led kind of initiative, what we are seeing is frictionless checkouts, which were not available uh, in a credit card world, for example. All in all, with new customer segments, new merchant segments, new technology, seamless checkout, we're just seeing a burst of BNPL across the globes, even in developed markets where you would say that the penetration of credit cards is more than 100%. Markets like Australia, markets like Western Europe, but still BNPL is taking over everybody, and it's the fad in the town.
Excellent. And of course, Pine Labs is not purely a BNPL player. You guys are a merchant platform, and BNPL is one of the big aspects, right? And
Absolutely.
you've also recently bought over Faith, which is entering the BNPL space as well. So a lot of
Yes.
exciting things to hear from you as we go along with this webinar. Let's move on to Marnix. Marnix, I mean, you guys have spent $500 million in this particular segment, so I'm sure you're very bullish about this. Tell us more about what are some of the biggest trends and developments that you're seeing in BNPL right now.
Yeah, no, obviously we are excited about BNPL, and we're also excited about our partnership with Atome. And so. I think it's quite aligned actually with Shajan was saying. Uh, we see more and more consumers using it at a rapid pace, and it's fast growing. So we can see that more and more merchants getting onboarded. I think the user experience is most of the time better than traditional credit card journey, and I think also the product is more transparent. So it is very obvious that consumers like it, and also actually in all our markets, which is quite a large mix of different countries, it's becoming popular more and more. I think one of the trends we find interesting is also that it becomes more and more like a shopping app, an environment where you start instead of directly going to one shop. Actually, consumers start, for instance, in the Atome app, and then they go to the merchants, which I think is very interesting. And I see also in other the large players like Klarna, for instance, they're becoming like a super app on their own. So I think that's a very interesting trend because if they can capture more and more interaction with the users on their platform, it also opens up new revenue streams, other possibilities. So I think that is one of the big trends I see happening now. So yeah. So overall, we are still very excited. It is a crowded place, a lot of players, like you said, but it's a product consumers really appreciate and like. So and that's why we want to be in there.
And I think it's really interesting, right? Because if you talk about more traditional consumer credit, that's at the last mile of the purchase where you actually need the credit. And now this kind of flips it as uh, BNPL kind of control the entire customer journey of being a platform, right? So that's an interesting trend, definitely. Thanks for sharing. So maybe we can move on to Anindya. And of course, you guys are a consumer intelligence platform. You work on alternative data. So I think your insights would be very interesting to look at, what kind of data trends that you're seeing happening around the BNPL space and how the players are utilizing data.
Yeah, I'm probably the odd person out in this group because I'm not part of a financial organization. Right? In fact, you know, the only reason I'm here is because so we what we do is super simple, guys. We provide data that helps people build better AI models. I mean, so the trend that we have seen, and we have seen this, and if you take our customer base over the last 1 year, probably the biggest vertical where we have scaled is in lending, and BNPL. We are now working with quite a few lending companies in Southeast Asia and South Asia, in particular in India, in Indonesia and Vietnam, and increasingly in Latin America as well, where we are providing class of data that is being used by so we the so Chayan and Marnix talked about sort of the consumer side of BNPL. On the provider side, people that are lending money, they face some pretty and again, these are my learnings as well, so this is probably very simple for you guys. They face some pretty interesting problems as well. In our clients, we find delinquency rates of 8%. Right? Living in the United States, the commercial bank, it's just insane to think that. Collections have sort of super complex problems. Fraud, the amount of fraud, simple KYC verification is hard, right? Because base verification data doesn't exist. Underwriting is hard. So I my sort of lens into BNPL is the use of data and the use of and in not all cases, and the use of very interesting AI, which of course our customers are using. We are helping them to sort of make BNPL profitable, more profitable for the providers.
Thank you for that. And of course, beyond just profit, it's important that we profile the customers correctly, right? Because at the end of the day, if a lot of our consumers end up being in a bad debt, it's not a great reputation for the industry because it's still fairly new. And of course, the model for a lot of BNPL is not to earn money from late fees, right? But to actually earn from the merchants. I think this kind of alternative data can not only be profitable for the BNPL players, but also important to consumers and especially the regulators who have deep interest in ensuring that household debts are not too terribly high. So, of course, these are important things that we can dive a little bit more into as well. Thanks for that, Anindya. Let's move on to Trina. Trina, what are some of the big things that you're seeing right now, considering that you guys are one of the big players around the region? Share with us more on your views.
Hi, Vincent. Thanks for having me on the show. Let me just pick off from where Anindya was talking about. I think that the services that his company is providing is super important for BNPL space because in the markets that we operate, being Southeast Asia and the broader Asia Pacific area, in some of the markets, especially countries like Philippines, Vietnam, Indonesia, if you do not have good data about the customer base that you are exposing yourself to, that poses a huge risk for the company, which is quite different, as noted before, in terms of what is happening in the US and to some extent in Europe as well. So the operating environment out here is quite different. At the same time, you also deal with a generation where consumers are, using mobile first in terms as a way of consuming and purchasing goods. So you do need to be able to provide that seamless experience for them. So how do you offer essentially credit to somebody that you've never met before and could, for all intents and purposes, it is very easy to be fraudulent with today's technology, right? So it's super important that we're able to have that back-end infrastructure and the information that allows us to offer the services that we do at a huge pace, hugely fast pace, and with the quality that we're able to today. So I think when people think about BNPL, it's always about the integration of commerce with ease of use and providing a way to pay, kind of like a wallet solution. But that's probably only the tip of the iceberg in terms of the support that we have in our business to be able to provide that service. So when I think about what differentiates, the growth of BNPL out here and the opportunity set, it really is ensuring that the BNPL player really has a full set of capabilities that is able to grow with the needs of the market that is out here right now.
Thank you for sharing your insight. And certainly, like you said, in markets like Philippines, where the traditional kind of data are not centralized and not widely available, alternative data plays an even bigger role in ensuring that you have good kind of credit data on your potential consumers, right? And for my next question, maybe we'll stay on with Trina, since you do work a lot with investors, and we've seen a lot of funding rounds going into BNPLs around the region and around the world as well. And as a CFO, I'm sure you sit on this a lot of this investor meeting. So what is fueling that kind of investor interest, and why are they pouring money into this space right now, Trina?
I think it just goes back to the strong fundamentals of BNPL and the value proposition that it brings. So from a consumer perspective, it makes a lot of sense because it's convenient, and it for all intents and purposes, it's free because it's funded by the merchants, right? So why would consumers not use it? Not only that, but it appeals to a younger generation. So most of our customers are actually Gen Zs and millennials who are, more attuned to purchasing using their mobile, whether it's online or offline. People still pick up their mobile phone and want to check out and pay within seconds, and have all of that transaction history and data in one place. So that ease of use and convenience is there. Marnix also mentioned having that seamless experience through connecting payments with shopping experience and the way that you can market products, for example. I think for that, consumers really love that experience. It really helps them filter through the seamless, the huge amounts of information that's being thrown at them, and really focus on the products that they like, because we do use AI at the back end to help sort through and try to understand and profile the customers that we are talking to and individualize the content. And that is the reason why merchants want to work with us, because we are able to segment the information and say, hey, you guys want to target 25-year-old women who are really interested in the latest fashion and operating in central Singapore, or whatever the metric and criteria are. We're able to profile those customers and specifically run campaigns to help target that audience. So in terms of the effectiveness of your marketing campaigns as a merchant, it's huge. So the synergies are really there in terms of creating a really great consumer shopping experience. So that's why merchants want to pay for this service and partner with us. So it really creates a positive cycle in terms of supply and demand in this ecosystem. So you can see that from an investor's perspective, that sheer volume allows it to be an interesting space. And of course, once you have that critical mass, you can use that platform to be offering different types of, whether it's financial related services, consumer related services, e-commerce, and all these other applications that relate to the space that we operate in. So I think the opportunity is there. The opportunity to monetize is there, but we're still very, very early on in terms of the journey that BNPL is on.
For sure, and I think some of the areas you mentioned are not commonly what most people would think of ways to monetize the BNPL space, but certainly investors are interested in a lot of these things that you brought up, right? Let's move on to Maniksu. Your company invested $500 million into Atome. So, are the motivations as described by Trina, or are there other things that makes it, Standard Chartered bullish enough to put $500 million into this particular segment?
No, I mean, I think Trina covered a couple of really important points. I think it's a very strong proposition both for the buyer and the seller, and then it's not always balanced. But I think merchants see higher conversions, larger basket size. And it's a very transparent, convenient product for customers. So I think that is the base why it's important for us. I mean, as an insurer, they have a completely different profile of users than we normally have. It's a segment which we want to do more, but we don't have the experience and the knowledge to do that at scale. And I would even say the tech like Atome has. So it's a completely new segment. I think what we also see, and that's what I see in Australia and in Europe and the US, we also will start jointly offering other banking products over time. When we know these customers well, we understand them. It's also an opportunity to introduce other products into the ecosystem. And we believe that the Atome ecosystem by itself, because of all the merchants and all the customers, will be an ecosystem on its own. And with a very rich knowledge of these customers, a lot of interaction, because it really is an e-commerce environment in that sense. At least that's what I think. Makes it very interesting also to not only, it will not end with BNPL. I think that's the starting product. But these customers have different needs, and I think that makes it very exciting for us. And secondly, Atome is already in 9 countries. There's a huge overlap between our footprint and their footprint, so we can really also then help them grow into these markets. So we will support them in all these markets, and so that makes it exciting for us. And of course, low interest rates environment also help. Let's be honest, there's also a reason why it's growing fast. Let's see in 12 or 18 months with interest rates going up now, what will happen. I think there will be some friction, but for us, we are very clear that this is a key strategic pillar for us.
Thanks for providing insights from your side of the coin. Let's move on to Chayan. Chayan, do you have anything to add in terms of why you feel investors are really bullish about this segment, particularly because you guys are pitching to investors too, and you're also acquiring companies that's involved with this space as well. So I'm sure you have some insights to share with us.
Yes, of course. As Trina mentioned, right, we are talking to a generation which is mobile first, right? We're talking to, and Marnix mentioned that before. What BNPL providers have done is they have turned around the whole journey. So before it was discovery, and once I have discovered what I want, after a lot of figuring out, I will then go and figure out what will I use to pay. What now the BNPL companies have done is they have taken the discovery to themselves to figure out what customer I am targeting, what does they need, what is most likely they are likely to shop, and then do very targeted offers to them. So it becomes a lot more easier for this generation to shop. Also understand this generation, there's a lot of noise, there's a lot of content floating around, so they really don't have time to roam around in malls like we used to do 15 20 years ago. The favorite pastime used to be go to malls and hang around in malls. Today's youth, you will not find them hanging around in malls that much because they have tens of other things to do. It's a totally connected and digitized world. So they have other things and other priorities to do. So the last thing they want to do is to shop for a t-shirt new. They want to go to 10 stores and figure out 10 styles, and where is the best offer available, and then try and go to the store and this is, oh, I don't have your size, I don't have the color you want. So all of that. So they don't like all of that, friction. What these platforms do is exactly provide you the target thing you are looking for. Make sure that the whole ecosystem and the whole process is very frictionless. So obviously, there is a lot of interest from the investor community because as Trina was mentioning, we have just scratched the surface on this, especially in markets like ours, which is Asia Pacific, Southeast Asia, and South Asia, where the credit penetration is so low. I think it's a long way to go, and especially with making it so easy to get credit and get onboarded and get the right offers along with the credit. So it's not only the credit, but it is also relevant credit at the time I need, when I need, for what I need, right? So I think it just makes a very interesting story overall for everybody.
Certainly, and I'm guessing maybe the youth of the next generation might not be hanging out in the malls, right? Maybe they'll be hanging out in the metaverse for all we know.
Metaverse, yes.
As something that's growing and interesting as well. Thanks for sharing your views, Chayan. I'd like to switch gears a bit and maybe go back to something that we were talking about earlier about bad debts and consumer debts, right? And I think certainly this is an area that perhaps is on Anindya's side of expertise. So, talk to us about how you think BNPL players can use data to reduce bad debt. Share with us your experience that you've with your clients in the US and whatnot.
Yeah, so most of our our lending clients are mostly in emerging markets, so mostly in that region. So I would not profess myself of being an expert in how to reduce bad debt, but I can give you, it's sort of fascinating to see how data is being used, at least by our clients, right? So if I were to, as sort of, especially as Trina was speaking earlier, I was thinking sort of what are the categories of problems that they're using data for, right? Or I mean, they're using data for everything, but sort of what are innovative uses of data, right? So typically, I would say data is being, or the types of data we are providing is being used in three broad categories. It is being used in collections, is being used in sort of KYC verification, fraud prevention, and it's being used in underwriting, right? So the underwriting case is sort of super easy to understand, right? Because as Chayan was saying, credit footprint of consumers in emerging markets is super small. And of course, one of the main reasons why investor money is going to BNPL is at the end, these countries are restricted in people's buying power. So how do people buy more? Well, you got to give them cash, right? So you got to give them credit. So one of the sort of coolest ways I think our data is being used is we are effectively, there are a bunch of players for whom we are doing two things, right? We are providing sort of predictor artifacts that data that is predictive of how likely somebody is to default on a loan, right? And also we are preparing sort of credit course ourselves and providing this in the marketplace. So it's super interesting, right? Again, I don't know how much you guys sort of this will resonate with you. So we have found that across Southeast Asia and South Asia, think like the average value of the handset in a household is super predictive of how likely you're to default on a loan, right? So what we are providing, what most of our clients, so our clients in India, so we are householding every, well, that's independent of BNPL. We have a householding product where we provide household data. What they're buying from us, what they're getting from us is the average value of handset in household. And there's some super interesting nuances, right? So for instance, in Indonesia, it's the average value of the handset that is super predictive. In India, as we found out, the average value is predictive, but in India, the social difference in the socioeconomic difference in the household is much larger, right? So households have 2-3 people that are coming from outside domestic help that are using cheaper phones, other people in the households. In India, it turns out the max handset value in the household is a much stronger predictor of default, right? So I can speak for an hour giving you all these sort of super interesting correlations that we have found. People's mobility. So we have this, we compute this metric for every person in a geography that we call radius of gyration, right? It's nothing. I mean, you're going to a bunch of different places during a day. If I just plot them and draw the smallest circumcircle around these points, then the radius of that circumcircle is basically a measure of how much you travel. And as you average out over time, it becomes how much you travel over time. that, it turns out, is super predictive of loan default likelihood, right? In fact, loan default likelihood positively correlates with radius gyration after a certain point, and then negatively correlates, right? So one of the sort of the most interesting things we have found out working with our people are these 28, 29, 30 different things that either strongly positively or negatively correlate with risk, and we are providing that. In the collections phase, like I was telling earlier, Vincent, delinquency rates are much higher. One of our largest clients out of South Asia has an 8% delinquency rate, right? And what happens is that 25% of these 8%, meaning 2% of overall people, they're unable to contact in the collections process, mostly because these guys have been less than truthful in reporting where they live. So we have a service where when that happens, they come to us and we help them find where these people are, right? And what happens, as probably Chayan will know, is that at least our Indian clients are actually sending, people actually go looking for these people, right? People go. So we are providing a class of location data to find these people. Very interesting, 36-40% increases in collections rate. At the KYC verification phase, right? Each time these companies are getting an application, they're pinging us saying that, hey,
maybe on the KYC aspect, we'll jump into that a little bit later. But maybe on this part of conversation, let's focus on the delinquency and bad debt, right? So what you're saying is that you're using location data on the mobile handset. What other interesting data points do you guys use to determine that?
We have, so it's hard for me to give you all the stuff because we have some NDAs with our people on certain data.
Sure.
But I can tell you that household, what happens in the household, there are certain household characteristics that are super predictive of risk. Mobility characteristics, I gave you the radius of gyration and some other interesting mobility parameters that are very predictive of risk, right? There are the types of media you use, the types of apps you use, the types of the time you use those apps end up being predictive of, so it's very interesting that people's behavior and people's behavior that can be recorded through traces they leave are often very useful in helping figure out, their likelihood of paying back a loan or not. And the same with so it's not just loan default, also, so we work with people in giving them sort of premium products, right? They enter at one product, premium product, how likely they're to, so there are lots of nuances there, but yes, I mean, people's behavior are very useful.
Appreciate those insights. And I think certainly you won't be able to share all of it, but there's definitely a lot of different kind of alternative data points that can be used to assess the credit worthiness, right? Staying on theme with this topic, maybe we can move on to Trina and then Marnix and then Chayan. Maybe not just from a technological viewpoint or a data viewpoint, but the question is a little bit broader, right? How can the industry self-regulate, or how can the industry improve its practices to reduce the amount of bad debt that's coming out of this space? Because we've observed in Western markets the numbers aren't so ideal. There were some reports in Singapore that's also indicating that a lot of youth are getting into debt because of BNPL. So how can we do better in this space?
I think that's a very interesting question and topic, which we've been engaged with the community and also the various regulators to try to find out, what the right answer is for that. And I think that, the right answer depends heavily on the market that you're operating in. I think that we do need to consider that, for example, in Singapore, where we operate, the right answer, in inverted commas, may not look anything like what you need in Indonesia, because the demographics of the population, the phase of economic growth is also different. So you do want to factor in and balance the opportunities with the risks that BNPL presents, right? So, for example, let me touch on things that we do in Singapore. So we do consult with the MAS, the Fintech Association, and so on. about what the best practice should be. And with the other BNPL players in the market, we do have very regular discussions about how we should have best practices to operate in the space. We're very aware that in a market like Singapore, the users are very well versed in terms of looking at different ways in which they can finance purchases. The regulators are also very sophisticated, so we want to make sure that the solution that we're offering is applicable to the market. Now, having said that, the loss rates that we experience in BNPL for this market is super low. It's kind of like credit card levels, right? So, having said that, I think that the risk to exposure for consumers and not being able to pay off their repayments is relatively low, because we are quite mindful about the amount of credit that we do extend to the users. For example, one of the kind of beauty of BNPL is that every single purchase is financed, right? So you purchase a T-shirt, and then you go and purchase a handbag or whatever it is. And if an individual has problems keeping up with the repayments, we can switch off that payment method, the BNPL payment method, until they do reactivate the account. So the exposures are I think, smaller than what credit card is potentially exposing the consumer to. On the other hand, the MAS did reply to parliamentary query and said that actually, because BNPL doesn't impose any interest charges to the consumer, we're actually helping reduce and mitigate some of that debt risk in terms of compounding interest, for example, for consumers. So there is a certain space for a slice of BNPL in the market. And currently BNPL is, a tiny space or a form of financing for consumers. So there is still, I think, a room to grow in terms of providing that opportunity. And then just touching quickly just on Indonesia, for example, I think the considerations are a little bit different, like I mentioned before. The Indonesian government is very mindful and interested in financial inclusion and making sure that everybody in the economy is able to get access to financing of some sort, which is why I think that BNPL is a really great partner to help grow and uplift the community as well.
I guess beyond just using alternative data as a tool for assessing creditworthiness, in a way, BNPL is also going to provide the kind of data given time as well, right? That's also one dimension to look at it. And I think one point you brought up about how every market is different rings true, because, like you said, in the parliamentary reply in Singapore, MAS did say that it's not really a major risk, so there's no need to regulate it for a moment. But in Malaysia, on the flip side, the central bank is coming up with a Consumer Credit Act to have all this fall under the umbrella of the act to regulate BNPL as well, right? So different markets, different regulatory views are quite interesting as we progress along in this industry. Thanks for sharing your views, Trina. Marnix, any views on how we can reduce the amount of bad debt that's coming out of the BNPL space?
No, I mean, Trina, as always, was quite complete already. But no, but that's the thing, I mean, and you know that better than anyone, Vincent. But you cannot compare these countries. All these countries have different dynamics, different states where they are. I mean, I really believe that this is a great product to lift financial inclusion, and that's what we believe. And in markets like Indonesia and Vietnam, because this is a lot of customers who don't have a normal banking relationship at the moment. So by using alternative data, and you can actually reach out to these customers. I think one of the problems when I look from a banking's perspective, I mean, cost to onboard and cost to serve these type of customers is normally too expensive, and that's why we don't offer traditional loans or credit cards to them. And I think so. Regulating it in the way we are regulating banks will not solve the problem by helping this segment. So I think that is the real problem. And I think MAS understands that. We are planning to go live with Atome soon in Malaysia. To add on to your example, we are talking to Bank Negara at the moment how we can work on this. And I think there are a couple of features, just to go one level deeper, which you actually are very helpful. What Trina mentioned, you start with small ticket size, small credit limits at the beginning. You look at repayment behavior. You look at other data sources to determine if you want to extend more credit. That I think is way more sophisticated than a couple years ago. So there's just more data. So the risk is lower to do that. I think also the due date trackers, the alerts, and everything in-app engagement is just higher. So I think this is a manageable risk. And also mainly because the markets here, most of the markets, except Singapore, are not comparable to the European markets. This is not like you cannot get 4 or 5 credit cards. People keep adding debt on debt on debt. So in that sense, I think this is actually an opportunity to also structure it in a way that we can keep offering these products, but over debitors is very important and something we know we need to keep looking at. So I think that is where we are, and like Trina said, it's very early, so let's see and how it goes.
For sure. Thanks for that, Marnix. And Chayan, anything to add to this particular conversation?
Yes, so I think as Trina and Manik mentioned that in this region at least it is very early days, right? And given that apart from maybe Singapore, the credit penetration is so low that you're not really adding to the household debt, if you and that's the kind of primary concern of the regulators. But having said that, I also think that as this industry grows and it becomes a major part of the ecosystem, there will be certain things which the regulators will get in. So, for example, bureau reporting today, most of the BNPL providers don't touch the bureau or don't update the bureau. So, as customers, more and more customers come into the fold, then as an industry, if the reporting starts happening, it works both ways, right? So, it works for an industry. It works to weed out the rotten apples, as well as for consumers, it helps them build a credit score. So that, for example, a young guy who just started working wants to take a housing loan in 5 years or 7 years. If he is outside the credit, score and the credit. It also helps build the credit score and the credit profile of that customer over a period of time. So I think it's too early to regulate because there is a lot of interest and there is a lot of demand in the unmet demand in the market. And again, the regulators also have to be smarter the way they regulate. You can't regulate it like a bank, like Marnix said. So regulators like BNPL providers have come up with different data points to underwrite and evaluate a customer and control the life cycle of the consumer, which is adaptive lending lines, suppressing or increasing the lines based on use cases and things like those. Regulators will also have to come out with a lot more interesting ways and data points to look at while regulating the industry.
I think certainly, like, that's why a lot of regulators around the world also kind of hesitant to jump in and regulate, right? Because number one, the understanding is still quite new, and you kind of don't want to kill an industry in the cradle by over-regulating it as well. So I know both you and Marnix brought up some really good points. I do want to kind of dive into what are some areas that you think regulators should pay attention to when regulating, because at the end of the day, it's inevitable. But before we do that, maybe we can jump back into the conversation about fraud and KYC and what kind of frauds are emerging in this space and how do we prevent this kind of fraud from happening. So maybe, Anindya, if you could give us some insights in this particular area regarding fraud and KYC.
Thanks. Yeah, sure. So just to continue, what Chayan said. So at least I believe, and again, I look at it from a very different lens than the other three do. I believe that traditional, pulling these people into traditional credit fold, right? So for instance, our data is also bought by Experian, TransUnion, and Equifax, right? And we look at how they, it's going to be very difficult, even if you reported their transactions, even if you reported to a traditional credit company, the base of data to create a credit profile simply doesn't exist for these guys, right? Just, many of them are just borrowing from you. They have no bank account. They have no other. But I have a feeling, and again, these are things that in Mobilewalla we look at. I have a feeling that other alternate ways of sort of judging credit will emerge, right? So I'll give you an example. So we now have 17 clients, right? In the BNPL world. So it's pretty early, but we already see the same customers coming in from different places, right? So for instance, if I see the same customer coming in for a collections call from 4 different BNPL agencies, I mean, that's a signal, right? And then once you see different ways that people are trying to pull information out from us and from data providers, and they're always calling with a customer ID, right? These provide you very powerful, different from credit agents, but very powerful ways of, for instance, if I have seen that if we don't do it yet, but it's possible that we can for a provider X, we can say that if we receive a customer ID for KYC verification, it is possible for us to return to them the fact that, hey, this person has applied to you, but they are in the collections process in 4 other companies, right? I mean, those are in weeding out the bad apples, right? So there are very interesting themes that will emerge, which have not yet, as sort of these things get going. Coming back to fraud, of course, the other 3 will have infinitely better ideas of the different ways. We generally get to look at things like location fraud, right? And one of the from my friends in the industry, my friend Vijay Sharma at Paytm keeps telling me that one of the biggest frauds that people make is lying about where they live, right? And those are things that is within technological sort of realm of being significantly reduced, right? So imagine people like Mobilewalla probably have such fine-grained locational view of billions of people in the world that if somebody says that I live here, we can return to you, hey, has this person ever been seen within a 20-mile radius of where they claim to live, even one time in the last 3 months or 6 months, right? So there are certain kinds of broad sort of consumer fraud that people do that companies like Mobilewalla can help solve, but I'm sure there are many others which are sort of beyond the purview of data.
Thank you for that. I think, with the pandemic, I guess the way you evaluate location data has shifted quite significantly, right? Because earlier you mentioned about the travel distance. I would imagine this past 2 years, the travel distance would have reduced quite drastically and such. But yeah, I suppose those are some interesting data points that we can look at as well. Thanks for sharing your view on India. So I kind of want to dive back into the topic of regulation and some kind of key areas that regulators should look out for before regulating, right? But before I jump into that particular topic, does anyone else from the panel want to add into the topic of fraud? Marnix, Chayan, Trina, anyone want to add anything? Otherwise, we'll jump into regulation. And this time I'll give Marnix the opportunity to speak first. And then I'll jump to Trina, and then I'll jump back to Chayan. Marnix, go ahead. You have the floor. Talk to us about what are some key areas you think the regulators should pay attention to.
Yeah. No, thanks. No, I mean, I do think we need to be mindful of larger loans. I mean, I do see a trend that, merchants really like the BNPL products because also customers like it. So I also see now the more, let's say, more high-end retailers using it, and also then the ticket size will go up. Think about electronica, or think about, let's say, fancier handbags, dresses, that can go up into the thousands of dollars. And then I think there is something I do feel regulators will look at. So I think they will care about the loan size itself. How long is the tenure? Is it 3 months, 6 months? You also will see longer BNPLs now, because obviously a 3 month will not really help with a bag which costs a couple of $1,000s. So I think that is an area where I do feel regulators will come after sooner, and they will feel that if the ticket size reaches a certain amount, then they will want to do probably a full banking onboarding and want to do bureau checks if needed. So I think that is definitely the first area where I will see some friction, where we need to talk to regulators jointly and see, what is that, like that minimum amount? Where do you want to keep it completely frictionless with not all the checks, and where do we feel it start touching like a normal credit personal loan type of product? And because the market is rapidly evolving also to more high-end retailers on these platforms. So I think I will pause here. I'm curious what others think, but I think this is probably the first regulated environment where they will come after.
Yeah, I think definitely high ticket items would be one of the key points that most regulators would kind of pay attention to, right? So good point over there. Trina, any views on what are the areas that you think the regulators should pay attention to?
I'm glad you gave that question to Marnix first. I think that it probably is quite early to tell where regulation will focus in onto, as Chayan was talking about earlier. I think so far the BNPL players have been relatively responsible in terms of how they're deploying their exposures, because also, practically speaking, from our end, we're also managing our risk, right? So going out and giving, a lot of credit to people that we think may not be able to repay is also not our objective. So I think that we are at the moment relatively sensible in terms of self-regulation, but I think where regulators will come in and want to review would be areas where people are stepping in and taking advantage of the market. I think that the consumer relationship is obviously one area that regulators are particularly interested in protecting. And then obviously the other piece that I see frequently being discussed is around data protection. So ensuring that where we do collect a lot of information about an individual, that individual is satisfied or happy with what we're collecting, and the privacy obligations that we have are being respected as well. So for me, the quantum of exposure and debt burden plus privacy related issues are probably the two key areas that people are interested in right now.
Thanks, Trina. Just a cheeky follow-up question, right? I don't know if you guys have seen this recent news about the Monetary Authority of Singapore kind of telling the crypto and digital asset players that they can't be advertising in public, right? So do you foresee that maybe the MAS would also look at messaging as well? Like maybe certain messaging are too geared towards encouraging impulse buying or encouraging I guess unnecessary items, I suppose. Do you see that potentially happening?
I think the way that's manifested is around kind of responsible spending, right? So there is a certain component of that, and there is kind of discussions around how we should promote responsible finance across the consumers as well. So that is really how it's manifesting. I think in terms of the way that it's advertising, let's say, for example, take the extreme case where cigarette companies cannot really promote cigarettes in advertising. I think that is quite an extreme scenario, which falls, I think, in the same bucket as crypto, because the risks of that investment are quite big. I think BNPL has different characteristics, which will probably not get as far as that.
All right, cool. Thanks for that, Trina. Chayan, what are your views? Like, what do you think are some important areas regulators should pay attention to? You have the floor. Go ahead.
So a couple of things which Trina was mentioning. Obviously, those things like how total household debts, people actually not misusing the leverage which the companies are giving. Also, as Marnix was mentioning, as you have different products over a different period of time, and your higher ticket size, higher duration, and possibly with some of the products with variants of interest paying, interest bearing, what we have started seeing, with Klarna and Affirm coming with interest bearing, so regulators will then start questioning and looking at those as they look for credit card companies, very again, responsible lending, how we are promoting, what we are saying, what these companies are talking to the consumers while they are talking, making sure that you're not tempting or not pushing people into unnecessary buying. Things like those will definitely come over a period of time. But again, as I said, right now it's too small today as a part of the overall uh, lending ecosystem in most of the countries we operate in. So I think it's there is a long way to go. But those are the one other example which I think, and today because it is very small, it is regulator has not picked up. It is on the customer service side and the liability side, especially on fraud, right? So, like on the credit card side, you have a very clear understanding on fraud liability from a consumer perspective. It's very gray today on the BNPL side, right? That if I have account takeover, who is liable? Am I the customer I'm liable, or somebody who is liable, or the agency liable, or the merchant is liable? Who is liable? So I think those are the frameworks. As this becomes more material in the overall ecosystem, I think regulators will come back with those frameworks.
That's certainly an interesting consideration, right? I haven't thought about how there are such clear liabilities for traditional products versus BNPL. Certainly a good area for regulators to look into as well. Thanks for that, Chayan. Anindya, any views on the regulatory side of things, perhaps from the angle of data or even privacy? What are your thoughts? Your mic is muted, by the way. You need to unmute.
Yeah, thanks.
There we go.
Yeah, the regulation that we would be the most subject to, if on the data side, would be privacy. So we're already, companies like Mobilewalla are under fairly intense scrutiny with regard to, hey, are you getting the data the right way? Do you have permissions? Do you have consent? So on and so forth. So for the BNPL companies itself, and these are sort of a little asymmetric to the discussions we are having. But one of the things that I'm interested in is learning that BNPL companies are getting so much data, they're acquiring so much consumer data themselves. What rights will they have to use that data, right? So I would think that it would be hard for a individual BNPL provider to be able to, let's say, sell that data to some other provider, right? I mean, that I think would be out of the realm of possibilities. I'm even wondering how much there's clear, and the data side is already regulated, right? There's already regulations that cover personal data overall. So it's interesting to note how much can you yourself use, right? And if you cannot do that, are there, that's why sort of in the broader financial ecosystem, third parties like credit bureaus exist, because banks collect data, they have to use it a certain way. So those are sort of super interesting questions. Regulations, yes, on the data side, privacy, but does that allow an entirely new class of sort of pseudo credit bureaus, if you will, of this to come up that can serve the same purpose that credit bureaus serve for banks?
Right. Thanks for that. I guess that's also another consideration as well. Now we're going to take some questions from the audience, but unfortunately we are a little bit short of time. So I'll take maybe one or two, and then we'll jump on to some closing thoughts. So we have a question here from Akash, who's talking about the experience of using alternative data for credit decisions. What are the methods do you use for credit scoring? We will open this to maybe one of the panelists. Would anyone like to take this question?
Yeah, I can. Well, I mean, I could. That's what we do. So I'm happy
Sure.
to jump.
Go for it.
So the credit decisioning is eventually being performed by the provider, right? So, but on the data side, what we are providing them are one of two things, right? Where we are providing them artifacts that they use in their own risk models, the models that compute risk, and we also have credit score that we provide. So the first part of your question, we see, it's hard for me to say how successful credit decisioning is, but we can tell you that from virtually all of our clients, we routinely map sort of how our predictions compare to what they see, and the correspondences are very high, right? So we are operating at between 80 to 92% predictivity, usually in the case of credit decisioning. This is by backtesting data, right? So
Mm-hmm.
we backtest, and then we are operating between 80 to 92%. And what was the second part of the question, Vincent? What data?
Alternative, like, let me just bring the question up again. What other methods do you use?
Yeah, so
for-
our scores are built, so basically our scores are built by taking actual credit data, actual data of, we'll work with a BNPL company. They have data on, consumer that they have loaned to, and some people have defaulted, some people have not, right?
Mhm.
So we take that, we layer on, we of course have an enormous amount of data on those consumers outside of that interaction. We layer that on, and we build models. We use machine learning to build models of prediction. I mean, that's how we do it.
Sure, thank you for that. Maybe we could also open up to either Trina or Chayan to get the perspective from the BNPL, like people, the players themselves. If very quickly, do you guys have any insights to share on other alternative methods you assess credit? Trina, yes, go ahead.
I no, less so on alternative methods. I think when we look at alternative and talk about alternatives as a bucket, we are looking at all of the non-traditional methods of assessing creditworthiness for an individual. But what I do want to highlight, as Anindya is alluding to, is the fact that data access to data is one component of that credit scoring value chain, but the other piece is the models that have been generated and the correlations that you are gathering through the data that you're seeing. So that is one of the fundamental reasons why, even though all of the BNPL players could be using a solution like Mobilewalla, but we could all come up with different solutions about the extent of our risk appetite for a particular individual, because of the underlying models that have been built by each of the BNPL players. So that is probably one of the core capabilities that we see in terms of us being able to differentiate ourselves in our ability to predict creditworthiness or fraud risk or whatever the underlying exposure is.
Thank you for that, Trina. And then we'll be taking one more question from the audience, and we will move on to the closing thoughts. So we have a question here from Ratib, who's asking, how do you think credit card companies, and I'm assuming maybe Ratib is referring to the network operators like Visa and MasterCard. How do you think credit card companies will face BNPL? Will they challenge them or go into acquisition? I think we've seen some partnerships around the world, right? Would anyone want to kind of take on this question? Chayan, perhaps? Or Marnix? Yes, go ahead, Marnix.
No, I mean, Chayan can also go. I think it will be a combination. Some of them will fight. Some of them will. I think there will be quite a lot of acquisitions. We have seen quite a few recently, and I think there will be more in this year coming. I think it will be part of their product portfolio eventually, if you ask me.
For sure.
Yeah.
That's probably what's going to happen.
I totally agree. I totally agree that cooperation is the name of the game in today's day and age. There are certain things which the credit card companies do well, which is ubiquity of acceptance and getting. Whereas there's some things which the VNPL companies do well, which is finding alternative ways to give credit to individuals who were not in that ecosystem. So I think it's a marriage which will happen eventually, and I don't see them competing, but I see the cooperating more and more. You will see, all the two big
Mm.
card schemes are all on BNPL with every player and with every model they can partner. So they understand where it is headed, and they know that they bring value to the table, so as the BNPL companies bring value to the table. So it's cooperation. Again, not only it. So the other question could be, how do banks see them? And the
Mm.
classic example is in front of us. Standard Chartered and Atome.
Hmm.
I see more and more cooperation from banks along with BNPL companies.
And you've also worked with a number of banks as well, so that's
Yes.
something that's definitely happening in this part of the world also. But I guess what we're seeing is that they're either acquiring, partnering, or it's just going about it every other way and seeing what sticks, right? So it's still quite early. We'll see how it progresses. Thanks for sharing your views. So maybe we can move on to some closing thoughts from our panelists. Maybe we can start with Anindya, and then Marnix, and then Trina, and then back to Chayan. Anindya, any closing thoughts and any parting wisdoms for our audience today?
No, I don't know if I have any parting wisdom for the audience, but I definitely gained a lot of wisdom from this session. So I leave a lot smarter than I came in. Thanks to all the panelists. I mean, you guys know, you guys have forgotten much more about BNPL than I would know. But yeah, I mean, it's a for a company that for AI company, it's sort of super exciting for me to see, an industry that is so driven by AI. I mean, taking a very
Mm.
narrow view of things and a sort of a very self-serving view. But no, it's it's an area that's ripe for innovation with regard to data, with regard to AI, and a variety of other techniques. So, but I'm
Great.
leaving a lot smarter than I came in.
I feel the same. I feel the same. Thanks, Anindya. Manix, any closing thoughts, any final views that you want to share with our audience?
Oh, yeah, I want to thank everyone. I think it was a very interesting discussion. No, it's just getting started, so I'm looking forward to see a massive growth, and yeah, we will be involved all the way. So very excited.
Certainly. Thank you, Marnix. And Trina, any views, any predictions, any wisdoms you'd like to share with us before we go?
I think that it's been a really fruitful discussion. So thanks for having me on the panel. I think the only thing that I can say is probably that the shape of the MPL that we know it today is definitely not how it's going to be in the next 12, 24 months. So there is still a lot of innovation and evolution happening in this segment. So it is a really exciting space to be in right now.
Certainly, and it's amazing to see how Atome has grown as well, right? Because when we first saw the press release, it's like, oh, okay, another player, and it's like, oh, wow, now you guys are everywhere. So certainly for the next 12 months, we will be keeping a close eye on how the players are operating, how the space is evolving. Certainly very interesting. Chayan, any closing thoughts for us?
No,
Any
thanks.
takeaways?
Thanks for having me. Very interesting discussions, especially on the data side from Anindya and from what's happening in the industry from Tina and Marnix. Uh, Definitely very exciting times. Do look forward to all the growth which Marnix said. Again,
Mm.
understand that the existing payment systems were not built for mobile first or Web.3, whereas with BNPL as one of the things we are building for the next generation of human interaction, right?
Mm.
So a lot of different things and a lot of different exciting features. Hoping to see both as an industry player and as a consumer.
For sure, right? Maybe one day we'll be hanging out with the metaverse,
Absolutely.
right? Anyways, with that, it only leaves me to thank all our audience for tuning in for the full hour. That's about 200 over of you from across platforms. So thank you for that. And all the panelists for sharing their very insightful views with us. So yeah, thank you and have a good
Thank
day.
you.
Take care now.
Thank you.
Thank you.